Welcome everybody, and thank you for stopping by ABGFinance, where finance and markets align. I haven't made a video in a while, so I thought this would be a fun chance to just see if I remember everything, and I would like to make more charting videos, so I thought again this would be a good opportunity to test that out. I am Canadian, and the Canadian markets and our Bitcoin markets, or I should say crypto markets, were open today. The US markets and futures markets were closed due to the observance of MLK Day. I do not typically trade crypto. I'm usually trading or scalping leveraged ETFs and dabbling in futures, but due to the market closures and the Canadian market is not exactly the most exciting thing to watch, I thought I would take a peek at Bitcoin, and I noticed something cool. So I thought, you know what, let's try and make a video just about some basic theory I used, and eventually just, again, practice that theory. And what I will do is at the end of this video, if you care to check it out frame by frame, I will try and make a summary of the frame by frame captions I took of this particular trade we're going to go through that I had sent to our group, and that'll just give you a better visual of my thought process throughout the move, because it wasn't exactly, a clean shot to where we wanted it to go. There was a little bit of fake out. So getting into this here, when I pulled up Bitcoin again, you'll see my watch list on the right. These are things I track a little bit more actively, so the charts are going to be a little bit more extensive. This one, Bitcoin, very basic. I just had some, areas of interest for me. And you can see here I missed a grand opportunity when that cap side broke there. And when I'm looking at this, so when I pulled this up, my first thought was, okay, you had the big drop back in November when you had the SBF scandal and the crypto fallout, and it looks like it made a resurgence on the monthly frame there, just about a month, and that's most likely at that 50. Yeah, so we got that just shy of that 0.5 fib, and obviously didn't touch the 0.618 if that's what you go for. But we do see a little bit of confluence there, so that's always interesting. But what really caught my eye, obviously, was the breakout here, and then more so what was in this area. So you'll see these little blue tabs and arrows. None of this was here. It was just a clean chart. But obviously, right, when you do a full retracement like this, the probability could be that aggressive sellers are still sitting here that didn't catch their bids maybe all the way back in November. So it's an area of interest to me, so I just wanted to check it out, right? Just see what's happening. So I pulled up my 5-minute chart, and what I did was, again, none of this was here. I simply started by identifying the drop level. So what I considered a major area where your impulsive move started to the bottom of the impulsive move. Over time, I should say, the bottom of the impulsive move carried down to this level here, and you can see that fall down, or that breakdown was about 2.3%, and then you can see from that it wasn't necessarily as impulsive. It was off the hop, but then it kind of created some channels and balance structure before the next impulsive move. But ultimately, we took it from the bottom to the top. And this top, where the hand is right now, is today at 2 p.m. And you can see it kind of peaked around that level, which is a retrace of the 2.3% and a little bit more, right? So we got 3.73% to the upside. And, even that, you want to see some drawdown. Things don't always go up, things don't always go down. So there's always that drawdown to the trader's position. And so on this 5-minute chart, I thought, okay, what I like to try and talk a lot about is balance, or identifying your channel and just sifting that channel, right? You can scalp the channel, but we trade extremes, because extremes are where you can make the money and have those, grade B, grade A, let's say higher grade setups. and take with more confidence. So all I did, my second step after drawing the breakdown and the rip up, was I just drew what I felt was a fair balanced structure here. So I just kind of took the main candle body of the high at the time, and then I took the low of the wick on this candle here, and none of this had presented itself just yet when I had drawn my box. So what we're going to see is I just like to pull that structure across and then see if we get a break to the upside or the downside. And what I noticed was, right, we started to get a little bit close to the MA. It was right around here, I believe. Again, I'll have to check my the frames I took pictures of and see if I'm remembering correctly, but I believe it was around this area here. We thought, okay, that's pretty interesting. This thing might actually collapse to the downside. So we went to the 3 minute and we tried to see, I believe it's the 21 MA, and I just wanted to see if there's any confluence. So we had our yellow line of interest, right? We drew that across, so where the impulsive move down started, where we had a key touch point, the impulsive move out. And so we drew that line across as interest, thinking that when we were up here, okay, that's going to be the drop line. That's the potential. So as we progressed, we see what I did was then I identified just some areas of interest on that line. So I drew the touch point where it was resistance. And here it was resistance again, but it broke. And then I included these green circles here saying that this is the area where presumably I believe we're going to find the drawdown and where things are going to settle for potential buy opportunities, or you can short it. I'm not necessarily biased towards either one. Again, I don't trade crypto. This was just me practicing some charting theory. And then the final step after I drew kind of interest areas and then where I believe the interest area would be later on, I drew just some touch points in the little red circles here, and those are just areas on the 3 minute frame, giving me confluence on that 21 MA. You don't get a perfect touch every time, but here you can see some good confluence on these 4. And what I saw here was instead of touching, we started to get the breakdown, right? And so my thought there was if we can crack it to the 5 minute, excuse me, if we can crack it to the 5 minute and we get a break of the MA here, then okay, we can consider that's pretty good downside. So that's what happened on our candle at 3:10 p.m., right? We got the downside here. We didn't get the full collapse though. You can see it sparked what was a little bit of a cover rally, and that was an aggressive cover rally. So we never had a full candle close below our channel structure of the yellow box, right? So do we have confirmation either way? Nah, not necessarily. And you can see here, anyone who took it short here, maybe this is where smart money was waiting for retail to load shorts. Again, I don't know how crypto necessarily trades. It's not my niche. But I'm thinking smart money was probably, if they're in this, waiting for retail to take it short here. They take it long, right? Then retail takes it long here. And then smart money tries to work it back down to the final level. And so you had that pump cover rally, then the dump, right? And we're still just kind of back in this channel. We're not really breaking it. And then finally, we get a move and a touch point right to a previous level. So that's when I drew a yellow line across here, identifying that area that, okay, that's the point now. Yes, we've got the confirmation on our MA of the breakdown, right around this area. Resistance now on the MA, where the MA was support 4 times, 1, 2, we'll say 3, and then right about 4, right? So now that MA is resistance, not good. And we see it collapse. We get that touch point. It tried to do a little bit of a rally, and then it was capitulation, right? Once we broke that level, we thought we were going to get that drop right to our interest area, and the timing on this one was almost exceptional. And then once we got that drop, we had this candle here. You can see the wick, 4:25 p.m. breakdown right there. And at that point, right, you can see this second buy candle at 4:30 p.m. show buyers stepping in, and it did not break the previous candle. So I'm thinking to myself, okay, that's now my very short-term microscopic double top forming. And so that's the level I want to see break to potentially get in this thing if you were to try and take it long again. Obviously, what was support 1 and 2 is now our potential resistance line, and it looks like it operated as such. So you have a touch point now, resistance 1 and 2, and it formed, stayed in our little channel here. And then now I don't have this particular segment with the snapshots, as I was no longer considering this my practice. Once it hit this area here, was all we were looking to see. But it looks like, let's just get into this real quick. So same kind of concept, right? You're in that channel still, so we could even quickly copy and paste our box. We can pull that box down, and we'll just make a little channel like that. You can include the wicks as well if you like. Body, depends what you like. Because I have the main area of interest line going across, I'm going to fit the box structure to that. So now we've created a channel just like we did up here, right? We can scalp this channel if you're really good. It's easier to do for me on leveraged ETFs because they move quick. And you try and trade the extremes, and the extremes are those impulsive moves out of one channel into another. And as you can see here, just as we say that, right, we did in fact have a confirmation outside of the structure, which you could have taken long, but that's not a buyer's candle, and I'm sure there's other confluence I could find that showed possibly even buyer exhaustion. Again, that candle, white in this particular example is red and purple is green. I've changed those colors, as you can see, obviously. So that's actually a red candle. So you don't want to buy on a red candle. But if that was, purple and it gave a little bit of a buy and you see some aggressive buyers coming in, you might want to take that long and see if we can get back to the top. But looks like we fell back in the channel here, right? And right now we're fighting the bottom. So if this continues down, that's our confirmation candle that this could be a short into the AM and what would be the first open market day for the US market of the week. And that's when things get really volatile and we could see some real fun structure happening. But that's just a quick summary, quick quote unquote, as I say that. That's just a summary of some basic chart theory. And I just wanted to share that and give myself a little practice. And then at the end of this, if you care to look at the snapshots of the particular trade as it was happening. So as these candles were printing, I was just throwing my theories on screen, taking pictures and sending them to the group. I'll post those as well if you want to just take a peek at those on your own time. Alrighty. So otherwise, thank you very much. And as always, keep on keeping on.